This class we started is the meaning of when Britain was now was the when we finished this objects also main object and subsidiary object. Okay. Main object. So main object are called page. Okay. So this is the Renika, my images are visible or not?
Yes, sir. Image is visible, but the sound is not so clear, sir. It is audible, but yes,
Okay.
the sound of
Hello. Is it visible? Is it audible?
yes, sir. Yes, no.
Hello.
Yes, sir. Hello.
Renika, am I audible to you?
Yes, sir.
Okay, fine. Okay. So, so last class we started objectives of auditing. Okay, main objectives and subsidiary objectives. So this is the main object of auditing. This is the element. Okay. So my cursor is moving true and fair view. Okay. So I mean accurate the books of accounts of auditor must. So I already explained main objects of auditing to produce the necessary information to the auditor by the company. Okay. So after producing the necessary information, the auditor is verify the vouchers along with physical verification of assets. Okay, physical verification. So after physical verification only, the auditor will submit the auditing report at the time of AGM, annual general meeting. So that is the main object of auditing. Later, subsidiary objects are detection and prevention of fraud, detection and prevention of errors. Okay. Detection and prevention of fraud and errors. Simply errors. Simply errors. Okay. Like we have any different types of errors. Okay. Error of omission, error of commission. Okay. Principal, error of principal. Okay. Along with detection of fraud. Okay. Detection of fraud. Right. So this is the second one, detection of prevention of errors. So before this, So these are the number of example of misappropriation of cash. Okay, it is the main point of like prevention and detection of fraud. Okay, a number of example of misappropriation of cash can be quoted. Okay, means cash theft from the business. Okay, cash theft from the business. If the cash transactions are not recorded in the books of accounts. Okay, I mean simply mismanagement of cash. Mismanagement of cash. That is known as misappropriation of cash. Okay, misappropriation. A number of examples of misappropriation of cash can be. Okay, total cash recorded. I mean, total cash transactions are forgotten to record the books of accounts. Okay, if cash is misled by the employees of the organization, remember these kind of mistakes or errors only large scale business operations, means only company type of businesses, because of owner is not able to control the total business. Okay, so for that purpose, owner will appoint the some kind of employees. Okay, if a multinational company having n number of departments, production department, marketing department, sales, I mean human resource department, finance department, all these departments are not handled by the one person. Remember, all these departments are not handled by the one person. These departments are handled by the departmental heads. Okay, even some departmental heads also having some employees. Okay, for example, production department handled by the production departmental head. So under production departmental head having some employees. Okay, that is not possible to total. I mean total production department by the not in the single person. Okay, production having machinery department, raw material department, tools department, maintenance department, fuel department. So all these departments are by the employees. That's the reason why these kind of mistakes, misappropriation of cash or else misappropriation of goods. Okay, all these mistakes are made by only large scale business operations, only company type of businesses, not in a partnership business, not in a sole trade business. Because of partnership business is a single, I mean, sole trade business is a single business. Okay, it means total business start by the, run by the, enjoy by the profits, bear the losses, everything is belongs to one person. That's the reason why no need of mismanagement. I mean, no chance of mismanagement in case of sole trade business, in case of partnership business. Even partnership business also, the business is handled by the partners only. Okay, active partner, the partner who participate day-to-day business activities. The partner is maintain the total partnership business. Okay, that's the reason why less chances of mismanagement of cash. Okay, mismanagement of goods. Okay, so this mismanagement located at only company type of businesses, because of company is a big one. Okay, if a public company, what is the meaning of public company? Public company having n number of shareholders. Okay, public company having maximum debenture holders. Okay, that's the reason why if employees is more, if nature of business is big. Okay, so in that places there is a misappropriation of cash or misappropriation of goods. Okay, see here, these are the points wise. Okay, misappropriation of cash. Next one, misappropriation of goods. Okay, next one, manipulation of accounts. Manipulation of accounts. I mean, we manipulate. I mean, for example, you are a accountant in so-and-so company. Okay, your accountant in so-and-so company. Accountant means you handle the total accounting system, particular department or else particular company. Okay, that means you have a chance to mismanagement. You have a chance to manipulation of accounts, because of total accounting things are within your hands only. So that's the reason why there is a possibility. There is a possibility. Main objectives and subsidiary objectives. Under subsidiary objectives, secondary function. Under secondary function, first one is detection and prevention of fraud. Fraud means intentionally. Remember, okay. Fraud means unstable. Okay. Am I audible to you? Renuka, Swati. Hello.
Yes, sir.
Okay. So manipulation. You have a chance to manipulate the accounts. You have a chance to manipulate the accounts because of you are the head of the department. You are the head of the accounts department. Okay. So these kind of frauds only possible at company type of business only, not to the sole trade business and not to the partnership type of businesses. Okay. It is the second element of subsidiary objectives. Okay. So next, detection of prevention of errors. Okay. Error is different from fraud. Remember. Okay. Errors in the sense mistakes. Fraud means intentionally. Okay. Intentionally committed the mistakes by a proper persons. Okay. Proper persons intentionally they commit the mistakes. Okay. So here errors. Okay. Errors are divided into, we have 5 types of errors. Error of principle, error of omission, error of commission, error of duplication, error of compensating errors. Okay. First one, error of principle. Error of principle means we have different types of principles, right? Accounting principles. Personal account, real account, nominal account. Okay. So, entries mistakes. For example, machinery purchased. Okay. What is the journal entry? Machinery purchased, what is the journal entry? Renuka, Swati, machinery purchased, what is the journal entry? Hello, in class lo unna malli chesi. So machinery purchase. If your audio is okay, just respond. What is the entry of machinery purchased? Renuka, Swati. Renuka.
Sir.
What is the entry? Machinery purchase. What is the entry?
Machinery purchase, sir.
Purchased. Yes.
Means in industry they purchase a machinery.
Okay, not a problem. So machinery purchased. Machinery is the fixed asset. Okay. Machinery account data to cash account. So machinery comes under real account, cash comes under real account. For example, in machinery purchased, in place of machinery purchased, we used purchase account data to cash account. Actual entry is machinery to cash. But as an accountant, you mentioned in place of machinery, you mentioned that is a good. Purchase account data to cash account. That is the error of principle. So what is the actual principle? Real account. But you mentioned nominal account. That is the error of principle. Okay. So first one, item of income posted to a personal account like rent received credited to the personal account of the person making the payment. It will reduce the profits and increase in creditors in the in place of real account, you written like personal account or nominal account. That is the you're violating the I mean your mistake. You made a mistake. Okay. So that mistake is known as error. Error of principle. Error of principle. Okay. Error of principle. Next one, error of omission. Error of omission means you completely forgot the transaction. You completely. Okay. For example, like you are a wholesaler. You are a wholesaler. Okay. You are a wholesaler. You purchased goods from the supplier. Same goods selling to the customer. Okay. So you made two transactions. One transaction is purchase transaction. One transaction is sales transaction. Okay. You recorded the purchase transaction. Purchase from so and so. Okay. Purchase account data to A account. Next to same goods to the B. I mean, same to B means same goods you are selling to the B. Okay. What is the entry? B account data to sales account. B account data to sales account. I mean, you are forgetting the sales entry. You are forgetting the sales entry. Okay. You enter the purchase entry, purchase to so and so to B. You are forgetting. That is the error of omission. Error of omission means you completely forgot about the transaction. Okay. So that is the thing here. So see here. Omission of purchase from purchase day book. Omission of sales from sales day book. Omitting entry for charging depreciation in the books. Rent or interest paid for even months. The remaining amount which is unpaid or outstanding has not been recorded in the books. I mean, any transaction, purchase transaction, sales transaction, payment transaction, receipt transaction, okay, asset purchase transaction, asset sales transaction. If you forget, that is comes under error of commission, error of omission. First principle is error of principle. I mean, completely you made a mistake. In place of real account, you mentioned the nominal account. In place of nominal account, you mentioned the personal account. That is the principal error, error of principle. And this is the error of omission. You completely forgot the transaction. You completely. Okay. Next, error of commission. Third one, error of commission. So, error of commission means you made a mistake, either debit entry or credit entry. You made a mistake, either debit entry or credit entry. For example, you are purchased goods from X. You are purchased goods from X. What is the entry? Purchase account data to X account. But you mentioned purchase account data to Y account. Okay. You are purchased from X, but you mentioned Y account. Okay. That is the error of commission. Error of commission. Error of commission means the error which is related to either debit or credit. Either debit or credit. For example, you are selling goods to the B. You are selling goods to the B. What is the entry? Sales account data to B account. Sales account data to B account. But in place of B, you mentioned C. Okay. In place of B, you mentioned C. Next. Purchase, for example, salaries paid. Salaries paid. What is the entry of salaries paid? Salaries to cash account. Salaries to cash account. So, in place of salaries to cash account, you reverse the entry. Cash to salaries. That is the error of commission. Error of commission. Okay. So, error of commission means the error which is related to either debit or credit, or else total entry is reversed. Okay. If the entry is reversed, that is comes under error of commission only. Okay. If the entry which is related to either mistake in the debit or mistake in the credit. That is also comes under error of commission. Error of commission. Okay. So see here, first example, wrong recording in a book of original entry wholly or partially. Goods purchased for 1,000 rupees recorded in purchase debit. Okay. As a 100 rupees of goods or 500 rupees purchased from M&Co as an N-Co. Okay. Remember, error of commission which is related to the amount also. The value of purchase 1,000 rupees, but you mentioned 100 rupees only. Okay. The purchase from M, you mentioned N name. So error of commission, either the error which is related to the value. Okay. The error which is related to the debit or credit. That is error of commission. Error of commission. Okay. Error of commission. So, and this is error of commission. Next one, error of duplication. Error of duplication. Duplication means you recorded an entry twice. You recorded entries twice. Okay. For example, purchased goods from A. Already written the transaction. But second time also you are going to be written. Okay. Duplication means one transaction affected twice. Okay. One transaction affected two entries. Okay. Two times you are written. Okay. Two times. That is known as error of duplication. Okay. See here, when a transaction is recorded twice and posted twice in the ledger, such an error will not affect the trial balance. Sometimes supplier sends the invoice in duplicate and both the copies, the bill are recorded separately. Okay. Remember, these errors are like at the time of making of journal entries. Okay. At the time of making of ledgers. Okay. Up to the balance sheet, there is a possibility of errors. There is a possibility of errors. Okay. Not only at the time of journal entries, but maximum times errors are made out at the time of journal entries process only. Journal entries, either journal entries or ledgers. Okay. Error of duplication. Next one, compensating errors. Fifth one, compensating errors means, for example, in generally, so what is the purchase goods purchased from X. Okay. Purchase account to X account. X account is credited, but in place of X account, we written Y account. Y account. So it means then you have to compensating in the place of X to Y. Okay. Y. Actual amount which is related to the X. But you are not mentioning the X account. You mentioned in the Y account. Y is not related to the transaction. So Y account is credited. So compensating means automatically next entry, then what will you do? Then you have to do same value to the debit value. From Y account is credited, then you have to debit it. That is the compensating. That is the compensating. Means compensation means in place of mistake in entry, in place of error entry, then you have to make it out compensating entry. So this is about error of prevention and detection of errors. Okay. All these are comes under subsidiary objectives of the auditing. Subsidiary objectives. Okay. So objectives of auditing, main objectives and subsidiary objectives. Okay. Subsidiary objectives are prevention of prevention detection of fraud, prevention detection of errors. Okay. Is it clear? Ardhamaindamma idi?
Yes, sir.
Okay. Next. Next one, next topic is advantages of an audit. Advantages. Okay. Like advantages of audit and users of accounting information, both are the same, remember. Okay. Both are the same. In general, accounting information evariki useful avutundi? Accounting information. Am I audible? Renuka and Swati, if it is possible, can you respond? Accounting information useful ever possible. Right, accounting information, it is
Auditor. Accounting information auditor system. Is it correct?
What, ma'am?
Accounting information auditor system.
Okay.
Is it correct, sir?
Okay. I mean, who are the users of accounting information? I mean, everki useful avutundi accounting information general ga. So, Renuka, for example, you have a business, ma. You have a business. Okay.
Yes.
నీకు ఒక బిజినెస్ ఉంది, నీ టోటల్ అకౌంటింగ్ ఇన్ఫర్మేషన్ అనేది ఎవరికి యూస్ఫుల్ అవుతుంది ఫస్ట్?
నాకే యూస్ఫుల్ అవుతుంది సార్ యాస్ ఎ బిజినెస్ పర్సన్.
Yes, that's good. Okay. Firstly, that is useful to the owners of the business. Okay, irrespective of any type of business. Okay, sole business or partnership business or company or whatever it is, that is going to be useful to the
owner of the business.
That is going to be useful to the owners itself. Owners itself.
Yes.
Okay. So this is the first point, ma. Okay. Advantage of audit and accounting information useful. Okay. So the owners of business and shareholders. Remember, auditing only to the companies, not to the compulsory of auditing is not to the partnership businesses, not to the sole business. It is useful to only companies. Okay. Companies must to conduct of auditing. Okay, because of company having shareholders. Okay. So here for the businessmen and shareholders. Okay. So how it is useful? Means what is the financial position of the business? How to know? Based on financial statements only. Okay. Based on auditing only. Okay. What is the object of auditing? To know the exact financial position, to know the exact profit or loss. Okay. To know the exact financial position, to know the exact profit or loss. Okay. In that purpose only, the company is conducting auditing. Along with auditing is conducting the production of interest of shareholders. Okay. It is it is very useful to the company shareholders because of how the company invest is going on. Okay. How the shareholders investment is going on. How the debenture holders investment is going on. Okay. Everything is depends on company's auditor's report. That's the reason owners is the first persons of accounting information. Okay. Accounting information users. Okay. So next one is for the management. Okay. After owners and shareholders. Remember, Shareholders means investors. Investors means like they are invested some amount. The purpose of investment is to get more income, from the investment. For example, I'm investing 1 lakh rupee in Reliance Industry. What is my object? To get more income, to get more than 1 lakh rupee, from the Reliance Industry. Okay, Reliance Industry. So, as a shareholder, I'm the first beneficiary of the auditing report. Say, for example, even I'm having a company, So even me also a first person to the auditing report. Okay. So that is the first one. Next one for the management. Okay. Management means company managed by the directors of the company. Okay. Company owners are the shareholders. Company is managed by the directors of the company. Okay. Directors of the company. So management means directors. What is the use of directors about auditing report? Means they know about what was the mistakes they made. Okay. So what was the auditing report? Okay. Then what is the dividend to the shareholders? Everything is under auditing report only. Okay. Next. So there is might be not clear. Okay. And so first one is for the businessmen and shareholders. Next one for the management. Next one, third one is for the creditors. Okay. Creditors, what is the meaning of creditors? Do you know meaning of the creditors? Renika, Swati. Creditors meaning, creditors. Okay. Creditors means debt provider. Creditor means debt provider to the business. Okay. Okay. So that's the reason why auditing report, it is useful to the creditors also. Okay. Then, for example, you have a amount. So, ఎవరికన్నా మీరు డెట్ ఇవ్వాలంటే ఏం చూస్తారమ్మా? ఎవరికైనా డెట్ ఇవ్వాలంటే మీరు ఏం చూస్తారు? Then repay capacity ఉందా లేదా అని చెప్పేసి. Okay. If repay capacity is available or not. So that repay capacity in case of companies depends on auditing report only. Auditing report will be submitted at the time of meetings. Okay. So that's the reason why auditing report is useful to the even creditors also. Okay. For the government bodies. Okay. You are paymenting of taxes to the government. So what is the base? Here the base is auditing report. Every company paying taxes to the government. Okay. Every financial year, the tax payment depends on auditor's report. Okay. Auditor will decide what is the payment to the tax of government. Okay. So that's the reason why then it is useful to for government bodies also. Next one for others. For others includes like market researchers. For example, if you have a habit to read the newspaper, so there is some business paper. In newspaper there is some pages of newspaper business papers. Okay, in a newspaper having some pages of business papers. So in that business papers there is some publications. What is the publication? This year so and so company so and so company turnover is so and so. Okay, this year so-and-so product turnover is so-and-so. That so-and-so is published by the market researchers. That in the market researchers are dependent by the auditor's report only. Okay. So that's the reason why auditor's report and accounting users information both are the same. Means these are the users of information. Owners of the business, shareholders of the business, traders of the business. Okay. Even employees of the business. Okay. You are an employee in so-and-so company. Okay. How to ask the increment? Okay. How to approach the increment? Increments based on financial statements of the company, based on financial position of the company. So that financial position is declared by the auditor. Okay. That's the reason why that is useful to the employees of the organization also. Employees of the organization, traders of the organization. Okay. Shareholders, government, all these information is going to be useful to the auditors. Auditing information. Auditing information, it is going to be useful.
Sir?
Yes.
Sir, creditors ki ela use avutundi okasari cheppara sir?
Creditors, for example, మీరు ఒక కంపెనీకి డెట్ ఇచ్చారమ్మా. మీరు ఒక కంపెనీకి డెట్ ఇచ్చారు. You are a you have a lot of you have a lot of funds. You are మీ దగ్గర లాట్ ఆఫ్ ఫండ్స్ ఉన్నాయి, మీ దగ్గర డబ్బు చాలా ఉంది
అంటే అప్పుగా ఇచ్చామన్నట్టు సార్.
అప్పుగా ఇచ్చారు. అప్పుగా ఎట్లా ఇస్తారు మీరు? కంపెనీ
వాళ్ళు తిరిగి ఇవ్వగలరు లేదా దాన్ని
repaying capacity, if company having repaying capacity or not. Okay, based on that reason only you are giving loans to the companies. Okay, not an individual. For example, we have a shares and debentures, right? Okay, shares means that is the part of capital investment. Debenture means that is the complete liability. Means you are providing liability to the company. Then what basis? Mean company's financial condition. Company financial condition. How to know the company financial condition? Means auditors give a report. Company financial condition is good or bad. Okay, so based on that report only, then you are going to be invest in a liability. You are giving a liability to the company. That's the reason why that is useful to the creditors. Creditors means individual person or group of person or a institutions. Bank is providing loan to the companies. Okay, bank. So like private banks. Okay, ICICI, Axis Bank. Okay, these kind of banks are going to be loans to the companies. So that loans is based on financial position of the companies. So that financial position based on auditor's report only. Okay, is it clear, ma'am?
Yes sir, thank you sir.
Okay. So that is the advantages. Okay. So next topic is types of audit. If you have a textbook, types of audit is also a long question. Types of audit is a long question in your final examination. Types of audit. Okay. So the types of audit is divided into 6 types of audit. 6 types of audit. Okay. So nature, scope, form of organization, who will be conduct, legal necessity, method of examination. Okay, remember auditing is compulsory every type of company, not to the sole trade business and partnership business. Remember, okay, you have to mention this point at the time of examination. Okay, auditing is not compulsory in case of sole trade business, in case of partnership business, but auditing is must. Okay, auditing is mandatory to conduct in a irrespective of types of company, whether it is private company, public company, okay, whereas government company, registered company, okay, like holding company, subsidiary company, government, I mean foreign company, Indian company, whatever the company, every company is must and should conduct auditing. I mean, external auditor appointment is mandatory, compulsory. Okay, because of company having shareholders. Okay, shareholders and debenture holders. Company having what is the maximum members of public company? Unlimited members, unlimited shareholders. Unlimited shareholders means unlimited investment. That unlimited investment, is it going to be in the like in the proper manner or not? That is examined by the external auditor. External auditor. Okay, that's the reason why auditing is must in case of companies. In case of sole and partnership, that is their view, that is their interest only. Okay, if a partners wants to conduct auditing, they may. If a sole trade business wanted to conduct a auditing, that is depends on the businesses, but not mandatory. These two cases. In case of companies, must. Okay. So so if you have a textbook, classification of audit. Do you have a textbook right now?
Yes, sir.
Okay. In your textbook, there is a question mark, types of audit or classification of audit. Once you open the topic.
Yes, sir. Second unit.
That question, like types, classification of audit, classification of audit. So under that we have a private audit, okay, whereas government audit, okay, internal audit, okay, statutory or compulsory audit, okay, continuous audit, annual or periodical audit, partial audit, balance sheet audit, management audit, okay, performance audit and priority audit. Around we have an 15 types of audit. 15 types of audit. Okay, 15 types of audit. You just focus on the definition of audit only. Remember, you just focus on the definition of type of audit, not to the advantage of advantage of that type of particular audit, disadvantage of that particular type of audit. You don't focus on that. For example, we have a private audit. Private audit. Once open the private audit. Once open the private audit. Once open the private audit. Swati, do you open the textbook one?
Sir, second unit kada sir, types of audit lo internal and external undi sir.
Yes.
అందులో ఇంటర్నల్ ఎక్స్టర్నల్ ఉన్నాయి సార్.
Only internal and external.
అవును సార్.
రిమైనింగ్ టైప్స్ ఏం లేవా? గవర్నమెంట్ ఆడిట్, ఇంటర్నల్
ఉన్నాయి సార్. ఇంటర్నల్ ఆడిట్ లో ఫైనాన్షియల్ ఆడిట్, కాస్ట్ ఆడిట్, ట్యాక్స్ ఆడిట్, మేనేజ్మెంట్ ఆడిట్, సోషల్ ఆడిట్. తర్వాత ఎక్స్టర్నల్ లో
ప్రైవేట్
ప్రైవేట్ ఏం లేదు సార్. గవర్నమెంట్ ఆడిట్ అండ్ కమర్షియల్, కన్స్ట్రక్షన్, సిస్టమ్ ఆడిట్.
ఓకే అమ్మా, మీకు ఏమేమి ఉన్నాయో అవి చెప్పండి నాకు. నేను అవి గవర్నమెంట్ ఆడిట్ ఉందా?
ఉంది సార్.
ఓకే ఓకే.
ఆపరేషనల్ ఆడిట్, స్పెషల్ ఆడిట్, వాల్యూ ఫర్ మనీ ఆడిట్, ఇన్ఫర్మేషన్ టెక్నాలజీ ఆడిట్, ఫోరెన్సిక్ ఆడిట్.
సో గవర్నమెంట్ ఆడిట్. గవర్నమెంట్ ఆడిట్ మీన్స్ the government of India, okay, the government of Telangana, Okay, the government of India, the government of Telangana, or any state government, they are going to be conduct the auditing of their particular departments. That is known as government audit. Okay. For example, Telangana state government having different types of departments. Okay. Police department, revenue department. Okay. Whereas Panchayat Raj department, we have different types of departments. All these departments are audited by the external auditor of the government. Okay, government will appoint the auditors, and auditors, they view, I mean, they are conducting the auditing, the verification the books of accounts. For example, police department. So in a police department, no, I mean, police department is completely service-oriented department. Okay, there is no income. There is no income to the income from the police department. మీరు అనొచ్చు సార్ ఇది ట్రాఫిక్ పోలీస్ వాళ్ళు చలానా రాస్తున్నారు కదా, దట్ ఈస్ లెస్ అమౌంట్. ఓకే, సో ఇట్ ఈస్ టోటల్లీ సర్వీస్ ఓరియంటెడ్ police department, even police department, hospitals, okay, even government schools and colleges. Okay, all these things are service oriented only. Okay, even single rupee not generated from that particular departments. Okay, so that's the reason why they will conduct the auditing. Okay, what is the total expenditure, how the expenditure is divided into number of units. Okay, how the expenditure is divided into number of hospitals, how the expenditure is divided into number of police employees. All these things are comes under government audit only. Okay. But దీన్ని ఎవరు కండక్ట్ చేస్తారు అంటే CAG, CAG అంటాం, కంట్రోలర్ అండ్ ఆడిటర్ జనరల్ ఆఫ్ ఇండియా. ఓకే, కంట్రోలర్ అండ్ ఆడిటర్ జనరల్ ఆఫ్ ఇండియా will conduct a auditing in the central government and state government. Comptroller, COG అంటాం, COG, Controller and Auditor General of India. So that department is the eligible to conduct of auditing, whether it is central government or state government. That is the government audit. Next one, internal audit. Okay, already told you yesterday, internal audit means internal auditor, he may or may not be a chartered accountant. Internal auditor may or may not be a chartered accountant. Internal audit is also known as a continuous audit. Internal audit is also known as continuous audit. Okay, continuous audit. Internal audit is known as continuous audit. Okay, internal verification of books of accounts is known as internal audit. I mean, if a company wants to every transaction in the manner of genuine nature. Okay, company don't want to make any mistakes. Okay, company don't want to make any kind of frauds. Okay, so for that reason, that type of company, they'll conduct internal audit. Remember, internal audit is not compulsory. Okay, internal audit is not compulsory, but it is going to be help to the external audit. Remember, it is internal audit is going to be help to the external audit. Okay, remember, external auditor may or may not be depend on internal auditor. Okay, for example, internal auditor is the employee in the organization. Okay, so if organization wants to commit a fraud, okay, if a company wants to commit a fraud, so based on that guideline, company guidelines only, the auditor will prepare the internal auditor report. Okay, remember, internal auditor, internal auditor may or may not be a chartered accountant. Okay, so that's the reason why he follow the company guidelines. Okay, whatever the company says, he just follow the guidelines, he just make over the auditing. But internal auditing purpose is to make out the mistakes. Okay, if a company is a genuine company, if a company wants to know what is going on in the company, In that reason, company is conducting internal auditing. Okay. Company having different types of departments. Okay. For example, if a multinational company, or else if a company like which is started with the production. Okay. Company itself produce the goods, sell the goods. Okay. That is the like from the production, the company start with the production. So that's the reason why company having production department, marketing department, human resource department, finance department, okay, research and development department. All these departments are having. So for that reason only, company wants to know what is going on in the company. Okay, if the amount is going to be in the manner of even like internal auditors report may not be followed by the external auditor, because of internal auditor is the employee in the company. Employee in the company means company ఏం చెప్తే అది చేస్తాడు. అట్లాంటప్పుడు మిస్టేక్ ఏమంటే మిస్టేక్ రాస్తాడు, రైట్ ఏమంటే రాస్తాడు. కాబట్టి internal auditing is not compulsory. If company wants to conduct internal auditing, that is me. But external auditor won't follow the internal auditor report. That is the internal audit. Okay, internal audit. Next. But you have continuous audit. Continuous audit ఉన్న మీ దాంట్లో స్వాతి
సార్
కంటిన్యూస్ ఆడిట్ ఉందా?
కంటిన్యూస్ ఆడిట్
టెక్స్ట్ బుక్ లో
లేదు సార్. ఒక్క నిమిషం.
ఓకే,
లేదు సార్, కంటిన్యూస్ ఆడిట్ లేదు సార్.
ఓకే ఓకే ఓకే. Statutory or compulsory audit? Statutory or compulsory audit? Okay, compulsory audit means from the beginning. I'm saying from the beginning, every company is must to conduct a auditing. Every company, irrespective of any type of company, auditing is must. Verification of books of accounts by the external auditor of the company. That external auditor will appoint at the time of annual general meeting of the company. Okay, that is known as statutory or external audit. External means the auditor will appoint at the time of AGM. Okay, means the auditor which is not related to the business. Okay, the person is not related to the business. The auditor is appointed at the time of AGM. Okay. He appointed the AGM. He submitted his auditing report at the time of AGM. Okay. His appointment on behalf of the shareholders, not on behalf of the company. Okay. అతడు ఎవరి కోసం పనిచేస్తాడు, తన ఆడిటింగ్ రిపోర్ట్ ఎవరి కోసం ఇస్తాడు అని అంటే ఫర్ ద షేర్ హోల్డర్స్ ఓన్లీ, ఫర్ ద షేర్ హోల్డర్స్ పర్పస్, నాట్ టు ద కంపెనీ. ఓకే, సో దట్ ఈస్ ఎక్స్టర్నల్ ఆర్ స్టాట్యుటరీ ఆడిట్. Appointment of external auditor is must as per the Companies Act 2013. Okay, Companies Act 2013 is the amended act. Amended act means 1913, we have a first Companies Act. After 1913, 1956. After 1956, 2013. So as per the recent amended Companies Act, appointment of external auditor is compulsory. That is the external or statutory audit. Continuous audit. Continuous audit means the auditing is going to be continued. I mean, internal auditing is a continuous audit. Remember, internal auditing is a continuous audit. Continuous means periodically. Okay, like 3 months, 6 months, 9 months, or else monthly. Okay, periodical audit is the continuous audit. So even we call it them continuous audit is an internal auditing. Internal audit means like to detect the errors or mistakes. What is the purpose of internal auditing or continuous auditing? Means to detect the internal errors, fraud. Okay, I mean day-to-day observations. But day-to-day observations are altered by the periodically. Periodically in the sense either monthly or quarterly or half yearly. Okay, that is depends on the company internal management. Company internal management decide. And then I mean, what is the duration of the internal auditing or a continuous auditing? That is the continuous auditing. Okay. Next one, annual or periodical audit. Annual or periodical audit. Okay. In generally, every company publish the accounts. Okay, publish the accounts or preparation of financial statements yearly once. Okay. Indian calendar year is it starts from the 1st April ends to the 31st March. Okay, 31st March. So after completion of financial statements, the statements are produced to the auditor, external auditor. Then external auditor verify the books of accounts and he'll make out the one auditing report, and that report is submitted to the AGM. Means yearly once, okay, or else periodical audit. In generally, after completion of accounts, okay, the accounts is submitted to the auditor. Generally, yearly once, companies are conducting a auditing. Okay, so that's why it is a periodical or statement. Periodical audit, or else it is known as annual audit. Okay. Next, balance sheet audit, management audit. Okay. Once you have to see the information, if any doubts, you'll ask me tomorrow. Okay. Types of audit is the very easy. Okay. If you know what is the concept of auditing, if you are understanding what is the concept of auditing subject is very easiest subject. Remember, everything is examination of books of accounts, verification of physical assets. Okay. Simply, the concept is verification of books of accounts. Then verification of books of accounts, eligible. What is the eligibility of verification of books of accounts? What are the qualification of auditor? Easy. Okay.